Welcome back. Let's take a look at futures this morning. A lot of breaking news this morning. The Dow Industrials right now are up 40 points. The Nasdaq is down 45. The big banks reporting third quarter earnings this morning, kicking off what will be a very busy quarterly reporting season. We heard from JP Morgan Chase, Wells Fargo, and Citigroup, all reporting double beats on earnings and revenue. Citi saying that it is announcing a reorganization plan that will result in a 15% reduction in functional roles, and that the first phase of the plan eliminated 60 net committees. They're talking about a smaller and simpler firm at Citi. Joining me right now is Mendon Capital Advisors President and Chief Investment Officer and RMB Mendon Financial Services Fund Portfolio Manager, Anton Schutz. Anton, good to see you. Thanks so much for being here. You have invested in banks for much of your career. I want to get your take on what you're hearing this morning in terms of earnings.
Well, I mean, it's not only is it better than expected, it's certainly good enough. People have been so bearish on this space. I mean, I guess to quote Taylor Swift, you got to hate, 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 right? I mean, they hate the banks, and the long onlys don't own them. They're underrepresented. People are short these stocks. Credit quality is much better than people expected. They've built reserves in prior quarters. You know, PNC, for example, had built a 7 or 8% reserve against commercial real estate. Well, it's already been paid for. So, you know, for the most part, credit quality is much better than people expected. Capital continues to build. Companies are buying back stock and paying dividends, and they're relatively cheap to future earnings as well as current earnings.
Yeah, I mean, coming into this quarterly number, I believe JP Morgan was down about 2%. From the last report, all these bank stocks have been down, but the Wall Street Journal is writing that banks' deposit pressures could get worse as interest rates move higher, Anton. It's been the issue around rates that have gone spiking. So how do things get better if rates are staying elevated? Well,
at the end of the day, I don't expect rates to stay elevated. So my view is the Fed's gotten way ahead of stuff. And things are slowing down, not to a disastrous level, but things are slowing down. So I expect rates coming lower. Deposit betas have actually been behaving. Loans are repricing on a fixed rate basis. So we're starting to be close to the bottom of the end here on the margin pressure for these banks. And clearly, credit quality is not the disaster everybody's expecting. And they've been expecting it for quite some time. So deposit costs will continue to rise, but albeit on a slower pace. I'm hearing that from all the banks. Look, the real rise happened when people panicked about Silicon Valley and First Republic and get my money out and get somewhere else, get somebody to pay me more. Well, the panic is over. No one's panicking right now.
Well, maybe, but look at the 30-year mortgage. I mean, it was interesting to see a better than expected quarter at Wells Fargo. Despite the focus on mortgages, mortgage rates are now at 7.57% on the 30-year. Look at the 15-year, close to 7% right now. Of course, we're looking at a big week of economic data, including housing data in the week ahead. We'll get the October NAHB Home Building Confidence Index on Tuesday, the housing starts and building permits report on Wednesday, existing home sales on Thursday. Anton, let's go through some of these banks. Wells Fargo, given its focus on mortgages, what did you think? And what about JP Morgan? Because if we're going to see these rates trigger a slowdown in the macro story, that's also going to show up in these numbers.
Well, what they've also done is they also have servicing rights, which gain in value, you know, when mortgages don't prepay. So that's an offset. Also, you know, all these banks have been very careful about cutting expenses and getting out of lines of business in the mortgage and the wholesale side of it. So there's been a big expense story on the mortgage side as well. But I do expect rates to fall, and eventually people who are locking in mortgages today are going to get a chance to refi at lower rates going into next year. We have an election year next year. I think the Fed will lower rates because the economy will be slower, and will lower rates. We've got a pretty political Fed. I think they're going to want to keep that party in power. So I expect rates to drop. And by the way, my last comment here is if the Fed wants to regulate energy prices, maybe we should put them in charge of the nation's energy program. Because at the end of it, you can't just regulate energy prices by raising interest rates. I mean, look at what's going on globally. You want to hurt Russia? You want to hurt Iran? Start drilling. You know, look, I'm not in favor of pollution, but their pollution's just as bad. So let's you know, burn our oil.
Well, I mean, look, you're making the point that we make all the time. The climate change agenda out of this administration has had massive negative ripple effects. Anton, real quick before you go, if I wanted to invest in the banks and I see opportunity here, given this sell-off in all of these stocks in the last couple of months, where do I go? Which banks are you invested in right now?
Well, of the banks that reported today, we own Wells Fargo in my fund. So that's become a bigger position. I like First Horizon. Unfortunately, it was a terminated merger with Toronto Dominion, but it's trading below book value, has a nice dividend yield. I expect them to announce a buyback at some point in the future, if it's not this quarter or the following one. And potentially that company could become for sale again. Certainly the sale price was $25. The stock's 10 and change.
Anton, good to have you on the program. Thanks very much.